This is probably the most important gold update this year. Hi everyone, it's me again from siamkid.org. I haven't made an update video in a while, but I had to make this one as I've recently come across some interesting data which will have some huge repercussions in the gold prices in the very near future. So I'm going to make this as broad brush as possible, and I'll just show you 5 pictures. They're graphs as you might expect, so here's the first one. This is the top 10 gold holders in the world right now, according to official figures. The left-hand column is the amount of gold in tons. So as you can see on the left we have the US, and they're trumping everyone with just over 8,000 tons, and Germany a distant second at just over 3,000 tons. Now if you read my newsletter you'll know that these figures are poppycock, and it's highly likely the US probably has less than 1,000 tons, if not 0. But the important thing I'd like you to pay attention to is China. Here it's got a modest 1,000-ton holding. Now you should know that China always plays the long game, and they're rather open that they want to take the world reserve currency status away from the dollar. So they're hoarding as much physical gold and silver as possible, not paper. And their gold holding stats are one of their biggest secrets right now. So this stat of just over 1,000 tons is largely guesswork done by the World Gold Council. But once China reaches their gold target, and no one knows what that is, some people say 4,000 tons, some people say 10,000, but no one actually knows. But when they do reach their designated or predetermined gold target, it's highly likely that that China will back the yuan with gold, and that will immediately kill the dollar, pretty much overnight or over a long weekend. So that's what they're playing at, and that's why they've nationalized all the mines in China, so nothing leaves China, and they're hoarding as much gold and silver throughout the world, and it's all being funneled back to China. And the only stats we have are through the Shanghai Mercantile Exchange. So here's the next one. This is the world top 10 gold holders by percentage of their foreign reserves. So on the far left again we have the US, which means they have around 74% of their foreign reserves in gold bullion. But the really interesting thing here is China. Of their $3.4 trillion in foreign reserves, they've only allocated 1.4% of their foreign reserves to gold, and they say they've only got 1,000 tons. So if this figure is correct, and who knows if it is or not, but if this figure is correct, China has some huge potential and huge leeway to get far more gold. So basically they haven't really even started accumulating yet. So here's the next one. This is the China gold imports from Hong Kong. Now the blue bars are what China brought in last year, and the orange bars are what they've brought in so far. Now we've only got data that goes up to March. Now please bear in mind that 2012 was the start of when China really started to ramp up their gold imports, and as you can see here, in the first quarter of 2013 they have absolutely trumped what they did in 2012. If you add it all up, last year from January to March they took in 135 tons, which is a lot, by the way. But this year they've taken in 371.9 tons up to March. That's a 175% increase in the first quarter alone. So who knows what it's going to be like for the rest of the year. So this is a very important graph, but the most important graph right now is this one. This is a graph showing the total world gold mining production versus the gold delivery on the Shanghai Gold Exchange. And it also shows the COMEX, which is largely irrelevant and is quickly becoming a farce. But this light orange mark here is what the world, as in if you took all the countries in the world combined and added them together. So basically the world pretty much makes, at the moment, just around 245 tons per month. And that's been slowly escalating because gold increases by about 2 to 3% per year in line with human population. So as you can see here, the red bars are the ones that you need to pay attention to. This is what China is officially taking in every month. And in the month of April 2013, their gold deliveries matched world production. which is absolutely phenomenal. And then again in March, their intakes almost matched world gold production. Now please also bear in mind that the spot price of gold right now is below mining costs. So a lot of gold companies are going bust or just stopping the supply of gold. And don't forget, 12% of gold is used in industry, and a huge percent is used in investment and jewelry. And there's also other countries like North Korea, Iran, Venezuela, all the so-called rogue nations. They are hoarding as much gold as possible, and the central banks. Yet China is matching world production on a monthly basis at the moment. And this is huge information. This may not seem much, but this will 100% affect the prices in the very near future. And I think we all know, in a commodity market or in any market, that pure supply and demand rules. And when a scarce commodity becomes scarcer, the price goes up, or when demand increases, the price also increases. So I hope you can see that there's a huge disconnect between the paper price and the physical price, or the physical demand, or the market, so to speak. Now this last picture, this last graph is quite complicated, so don't worry about it too much, but this is basically the GOFO rates, the gold forward offered rate. So like with LIBOR, well basically this is the gold equivalent of LIBOR, and if you don't know what LIBOR is, don't worry too much. But the thing that you need to note here is that the GOFO rates have just gone negative for the first time in the last 5 years. Now, the last time the GOFO rates went negative was just before Lehman Brothers went bust and just before AIG went bust, i.e. the start of the 2007/8 economic meltdown. And so to have the GOFO rates go negative now is a huge leading indicator that there's going to be some massive shifts in the markets, in the equity markets, over the next few months. And to put this into context, the last time GOFO rates went negative in late 2008, gold shot up 178% in the following 18 months. And also silver increased 400% in the following 18 months from the last time GOFO rates went negative. So let's have a look at the charts then. So going back to what I just said, if we just get an arrow here. So basically this was a point where the GOFO rates went negative, just this point here, late 2008. And then over the next 18 months it shot up, and it went up over 178%. And with silver is, if we just get silver out, yeah, silver is exactly the same. If we just add some arrows here, silver shot up, went from just under $9 an ounce to $50 an ounce. And if we just go back to the gold chart, now what we're seeing happening right now is, or a lot of people go, oh, gold's falling, it's crashing like crazy. But basically all that's happening is a complete repeat of what happened in 2008. We had almost an identical situation here. So this is late 2008. Gold was falling like crazy. People thought it was the end of the world in the gold market, but then it started to climb at a very fast rate. And that's exactly what's happening. And what happened was that gold was smashed down in paper price, same as silver, but then physical demand took over. And that is exactly what's happening at the moment. So let's look at a more closer time frame. So this is gold on the daily chart. So basically every one of these bars is a day's worth of price movement. And over the last few updates, I've accurately called each one of these big drops here. And even though I think the bottom is pretty much in gold, if you're accumulating physical gold bullion, then yes, the bottom is in. But if you're trading, I do expect to see another spike down. As we can see here, if we just zoom in, what we're having is it's forming a flag in a downwards trend. Now this is quite bearish. So, however, it's not. There is a possibility that it could break this trend line here and then shoot up. And basically in the market, you need to remember that every time the market contracts, we have expansion that follows it. And expansion is these huge movements here. Yes, I think it could shoot up, but I personally think what we'll probably see is another attack at this level at the sort of 1100 mark before having a probably an attack down here for the 1000 level. But I put my neck out on the line in my newsletter this month saying that 979 is the absolute lowest gold will ever go. I really cannot see it going any lower than that, because these prices are well below mining costs right now. So yes, we may see a little tree shake, i.e. where the smart money will probably try and get rid of the weak hands and force it down, getting rid of everyone's stop losses before shooting it back up. So over the next 18 to 24 months, it's going to be very interesting. So let's have a look at silver. Again, we have a similar sort of picture. It's just testing this 21 EMA here, and I do believe we're going to see another further drop. And just while we're here, we're just going to have a quick look at the S&P 500. So this is the US stock market, i.e. the world stock market pretty much. And what we saw was that the S&P 500 broke this trend line here. Basically the trend is your friend until the bend at the end. And we had this bend at the end here where the market sold off. But we have rallied, and that's basically due to news saying that we're going to have more QE or more free money, or the talks of QE tapering have been ceased for a moment. But I just think we'll just try and attack these highs here before we do finally roll over. And the UK stock market, the FTSE 100, exactly the same thing. Don't worry too much about all these squiggly lines, but basically the key level I'm really looking is that this 6200 level. Nothing major will happen until we positively break below this, just like we saw here. But yeah, well, that's our quick update. In a nutshell, things are going to get pretty good if you're accumulating physical gold and silver. But please remember, if gold is not a good investment for the average person. If you're a multimillionaire, then yes, but if you're an average person with wealth less than, say, 20 million or even 5 million, silver is the way forward. The historical average is that gold has always been 15 times more expensive than silver, but right now gold is 65 times more expensive than silver. So silver is the way forward, and as you know, I've been stacking for a fair old while. So yeah. Hope that helps, and I'll speak to you soon. Cheers, bye bye.